Remember, folks, from last week, we got the consumers' savings rate going from 0.6 to almost 5%. Businesses are doing the same thing. This is what we've been talking about. The uncertainty caused by Liberation Day, the uncertainty caused by this, that, and the other things with tariffs. It is causing people, you and I, and companies to pull back. This is what uncertainty does. We just got a truly horrible, nasty employment report, aka the ADP report. Remember, folks, each and every month we get 3 employment reports. Yesterday, we got the JOLTS report, job openings. Job openings were surprisingly better for the month. They were expected to go down, but they went up slightly. And then we got the ADP report, often called the private payrolls report. Last month, it showed 60,000, which was a bad number. It was expected to increase, aka forecast, to 110,000, back to triple digits. And folks, it was a nasty, nasty miss, coming in at only 37,000 jobs. Now, what does it mean? Is this a big fat nothing burger, or is this a sign of things to come? Again, remember, on Friday, we will get our third and most important jobs number from Bureau of Labor and Statistics, BLS, and it is expected to show 125,000 jobs created and keep the unemployment rate at 4.2%. However, given this truly disastrous private payroll report, what does it mean for Friday? Well, first, the ADP report was a 5 standard deviation miss. That is significant. We're not talking 1 or 2 standard deviations. We are 5 standard deviations miss to the wrong side. This does not bode well for the Friday number. However, if you go back and watch our monthly discussion of the ADP report, we always remind you that it has historically, at least in the last 3 or 4 years, not been an accurate call for the BLS report. However, we got to remember that the BLS report on Friday will include government jobs. And I don't know about you, but I don't know how the government jobs would be up given what's going on in the administration. So I've often thought that the Friday number would be bad. Again, I put an over under it at 100,000 and I took the under. This again is for Friday. So I'll ask you right now, and again, we'll talk about this on Friday in the Friday financial wrap up, I'm sure. And then again on Sunday, what do you think? BLS Friday. Will we get over or under 100,000 jobs created for the month? And we will go even one level deeper. I actually think there's a good chance that the unemployment rate actually bounces up from 4.2 to 4.3. These are all signs that the hard data is getting weaker. Remember, the Fed has been remarkably consistent. They're not concerned with the soft data. They're not concerned with feelings or opinions or anything like that. They want the hard data. And again, the hard data on jobs is starting to show up. So again, it'll be interesting to see what happens Friday, what happens with CPI next week, heading into a Fed meeting. But yes, folks, I think the ADP report paints a very negative picture of the market. Obviously, President Trump came out after the ADP report saying too late, Powell must lower rates. We have Polte out saying the Fed needs to lower rates. It is going to get loud and consistent. So we shall see what happens there. On top of that, we got another economic number that was frankly ugly. It wasn't as nasty or disgusting as the ADP report, but it should be concerning, and that was ISM Services. Again, when we talk about these reports, ISM Services, remember that 50 is an important number. Above 50 means growth. Below 50 means contraction. ISM Services has been over 50 for quite a while. Services, service-based economy doing quite well. However, let's give you the numbers. It was expected to be 52. Again, solid growth. Last month was 51.6. So again, growth on the previous month. Unfortunately, it came in at 49.9. That is contraction. That is no bueno. That is not good. So we shall see. Inside the ISM services, the subcomponent or the sub-metric that was most concerning to me was new orders. New orders were expected to go up 51.6. They actually contracted hard to 46.4. Remember, folks, from last week, we got the consumers' savings rate going from 0.6 to almost 5%. Businesses are doing the same thing. This is what we've been talking about. The uncertainty caused by Liberation Day, the uncertainty caused by this, that, and the other things with tariffs. It is causing people, you and I, and companies to pull back. This is what uncertainty does. Let's go into some Fed speak. We got a bunch of Fed speak heading into inflation week. We had Fed President Cook talk about we can't prejudge what the FOMC will do on rates. Again, to me, that feels like, don't try to put words in our mouth. Uncertainty acts like a tax on business. I'm not sure if uncertainty acts like a tax as more like a weight. It just means they're not doing anything, right? They're pulling back. They don't know the rules of the road, so they're just not doing anything. Goolsbee, Fed President Goolsbee, escalating trade war could spiral up inflation rate. Again, basically under the context that we may see a second coming of inflation. The slowdown related to tariffs is not showing up for a while. That's interesting. Basically, all of this uncertainty and whatnot will not show up into the hard data for a while. I suspect it is starting to. Again, you got to remember, April 2nd was Liberation Day. So it's we're going into the second month now. Again, Fed President Cook, one more time, says tariffs could lead to stagflation environment. Again, this is where we have been for quite a while, specifically Anna Kelly calling out stagflation as a risk last year. Good for her. Fed President Bostic, still a way to go on inflation. Core prices are still an issue. Remember, folks, the Fed cares about core, not headline. Headline PCE was 2.1. Core, I think, was 2.5. And again, remember, given base effect, it is very likely, I think, that inflation shows to be increasing over the next 3 months. Hard data, this is again according to Bostic, hard data has yet to reflect the gloomier sentiment. Again, consumers to date have felt horrible but kept spending. Let's see if that rolls over. Bostic says, recession is not in my forecast right now. Folks, did you see GDP Now? You can go to GDP Now. It's put out by the Atlanta Fed, I believe. And here recently, I think yesterday, GDP Now is calling for a 4.6% GDP growth in Q2. 4.6. That is strong. So it will be interesting. And then finally from Fed President Bostic, I am in no hurry to adjust our policy stance. Folks, again, higher for longer, as I've said for quite a while now, no cuts in 2025. We did get some earnings. Again, Dollar Tree, right? We had Dollar General yesterday. Dollar Tree beat top line, beat bottom line. Same store sales up 5.4%. I do think it's interesting that Dollar Tree, Dollar General are doing so well. It really shows that they're maybe they're getting net new consumers. I would have expected Dollar Tree and Dollar General to show large impact from tariffs, but as of right now, hasn't shown up in the numbers. CrowdStrike missed on revenue, beat on earnings, but had weak guidance. And then HPE or Hewlett Packard beat on top line and bottom line. Folks, remember, we are going to do a session in school on Sunday, 2 hours. 2 hours inside school. We've got Dion confirmed. Dion from Dion Talk Financial Freedom is confirmed. We're looking to get Matt confirmed to see if he can be on, Matt the Lumberjack. But worst case, you're going to get Dion and I for 2 hours on Sunday. Thank you, Dion, for doing that. If you're not a part of school, it's time to sign up. Give it a try for 1 month. It only costs you $20. If you don't like it, cancel. No hard feelings. But I hope to see lots of you there interacting with Dion and seeing what the great teacher, the great storyteller has to say. We did get mortgage app data today. Again, it depends on how you want to position or slice and dice this. If you want to say, if you want to have a negative reading on mortgage applications, you would say this. Mortgage applications are down negative 3.9% week on week. That is the third negative week in a row. So again, if you want to position mortgage apps as negative, you would say that. However, if you want to make mortgage apps look positive, you could actually say that mortgage apps are up 18 weeks year on year. So should we be concerned about mortgage rates falling 3 weeks in a row? Or should you go, wow, mortgage apps are up 18% or 18 weeks in a row on a year over year basis? Again, both statements are true. It looks like we're getting some data on the impact with tariffs with China. Looks like U.S.-China trade plunged 19% in April, which is a significant number. That was the first full month of 30% tariffs. We did get a report from Go Banking. Go Banking is highlighting six housing types that are set to collapse in 2025. Number one is condos. We're seeing a big impact on condos in Florida. Lance Lambert has been ahead of the game there. Apartments in urban areas, as work from home allows more people to work in suburban areas. Older suburban homes, these are the fixer-uppers, the 1950s builds or later or earlier, I should say, earlier. Again, new construction is sort of winning the day. Luxury properties. Hello. We've been talking about that for a while on this channel. Properties in high unemployment areas. Again, maybe Washington, D.C. and surrounding areas, things of that nature. And then finally, vacation/second homes. I would actually add on to that people who were trying to game the short-term rental area and the rules changed. We need to talk about Japan. If you guys don't know this is important. Remember, we've been talking about the Japanese bond rate increasing. I think it passed 3% for the first time in decades. And we have additional taxes perhaps coming on investors from foreign countries. Again, Section 899 of the Big Beautiful Bill. Look it up. So we may be forcing Japanese investors, we may be forcing Japanese investors to repatriate dollars away from the U.S. back to the Japanese yen. And folks, that will make rates go higher. I simply do not understand the logic of having foreign investors repatriate to their currency when we need to refi and roll over $8 trillion. It seems like a foolish move because the only answer will be higher and higher rates. We did get a forecast on mortgage rates from Fannie Mae. I think Fannie Mae is being a little glass half full, but you tell me. Let me know if you think these predictions are good or bad. Again, this is from Fannie Mae. These are not my predictions. Fannie Mae says by the end of 2025, which is in 7 months, the mortgage rate at the end of 25 will be 6.1. 6.1%. Now, again, I have to ask myself, how bad does the economy have to get for mortgage rates to be 6.1%? Sometimes I say, folks, be careful what you wish for. And then on top of that, you've been waiting for rates to get in the fives. Hello, 2026. 2026, according to Fannie Mae, we'll see mortgage rates at 5.8%. Wow. That is pretty crazy. Even Fannie Mae is now calling 2025 a buyer's market. They're saying that the buyer's market is as strong as any market since 2013. Folks, again, lots of people are starting to call this a buyer's market, but we did it first. We told you about it. I'm very proud of that. Don't forget, folks, to join school. We will be doing live sessions on Sunday. Bring your questions. This Sunday, we have at least one special guest in Dion. We will try to get Matt confirmed. Actually, I'm speaking with Matt and Dion in about 16 minutes. We'll see if he can't get confirmed. And then lastly, don't forget that Steadily is landlord insurance. Somebody who has sponsored the daily financial news, somebody that I use, somebody who's helping me save money on a 4-plex, a 10-plex, and so on and so forth. There'll be a link below. Go get your prices, see if they can help. Take care. Later.